You see that number, and suddenly the dream feels real. The open road, the freedom, it's all within reach for just a few $100 a month. But that little asterisk, that's where the dream ends and the nightmare begins. Hey everyone, I'm John, and welcome back to our new front porch RV balance sheet. Rhonda's off visiting family, so it's just me, you, and Sleeping Jazzy. And since the accountant is away, I wanted to talk about something that has always bugged me, even back when I worked at the dealer service department. Today, I'm pulling back the curtain on the most deceptive tool in the RV sales playbook, the low monthly payment. It's that hook that gets you in the door, and it starts with a shell game designed to separate you from your money. The conflict is simple. Dealers want you to focus on an imaginary, affordable monthly payment. The reality is the final contract that can be doubled that amount, loading with hidden fees, inflated interest rates, and high-pressure add-ons. The villain of this story isn't just one person. It's the entire system designed to confuse you. But at the end of this video, I promise you'll have a data-driven, step-by-step playbook to defeat this system, take control of your RV purchase, and save you thousands of dollars. All right, let's start at the beginning. You're at an RV show. You see the sign, $408 a month. How do they even get that number? It feels like magic, but it's not magic. It's misleading math. They are manipulating three key numbers to create what is called a psychological anchor. First up is the loan term. A normal car loan is maybe 5 to 6 years. For RVs, they stretch them out, way out. They often calculate that advertised payment based on a 20-year or 240-month amortization schedule, spreading the cost over 2 decades to make that monthly cost or that monthly payment tiny. But here's the catch. The actual loan might only have a fixed rate for the first 5 years. After that, you could be facing a massive balloon payment or be forced to refinance at whatever the interest rates are 5 years from now. It's a huge risk. Next, the down payment, or accurately, the lack of one. The ads almost universally assume you're putting $0 down, which sounds great, but in the real world, most lenders want to see 10 to 20% down even to approve the loan. A zero down assumption just inflates the amount being financed, making the 20-year term even more critical to keeping the payment number low. And finally, the interest rate. That's a beautiful low APR they're advertising. That's a teaser rate. It's reserved for people with perfect credit. We're talking scores of 740 or higher. For most people, the actual rate will be higher, and sometimes much higher. And this is legally covered by 3 little letters in the fine print, OAC, on approved credit. That's their get out of jail free card. And that advertised payment, it's an offer. It's a fantasy. It's a number based on the longest possible term with no money down and a perfect credit score. And it completely ignores the tax, the title fees, and all the other charges they're about to hit you with. Okay, so the fantasy payment got you to the negotiating table. You haggled, you get them to knock a few numbers off the sticker price, and you feel great. You kind of think you won, but the game is just getting started. Now you have to run the gauntlet of adding fees. This is where they take back every penny of that discount you just fought for. First, they hit you with freight and destination fee. This is for shipping the RV from the factory, and it's a real cost. But the amount they charge you can be wildly inflated. This was a central issue between Oregon Attorney General and Camping World. The investigation found that Camping World was allegedly doubly charging freight and prep fees that were already included in the price as a way to claw back the discounts they advertised. Next is the dealer prep, or the PDI fee. This is for cleaning the RV, checking the systems, and doing the walkthrough with you. I've seen this be over $2,500. And personally, that making sure the product you're selling actually works should be part of the cost of doing business, not an extra charge to the customer. Then you have the doc fee for paperwork and even vague administration fee. These are often presented as a mandatory fee, but in many cases, they're almost pure profit for a dealer. By the time they are done, the price of the RV is thousands of dollars higher than what you agreed to. This new inflated number is what they call the out the door price, and that's the number they take into the most profitable room in the entire dealership. After you've been worn down by hours of negotiating, they lead you into a small, quiet office to sign the paperwork. This is the Finance and Insurance Office, or F&I. It looks assuming, but the room is a dealership's real moneymaker. 50%. That's staggering. It means for every dollar of profit the dealer makes selling you an RV comes from this one office. The whole sale process designed to get you into that chair, tired, mentally committed, and ready to finance. The F&I manager has two primary jobs, both of which make the dealership lots of money. First is playing what I call the rate game. When the dealer submits your loan application, the bank approves it at a specific interest rate. This is called the buy rate. It's a true wholesale rate you qualify for based on your credit profile. But that's not the rate they show you. The F&I manager has the discretion to add a percent points on top of that buy rate. The new higher rate is called the sell rate, and it's the only one you see. The difference is pure profit for the dealership, and it's called dealer reserve. And this isn't a rare practice. One MIT study found that 78% of all dealer-arranged auto loans have a marked-up interest rate, with the average markup being over a full percent point. And on a large RV loan, that can add up to thousands of dollars in extra interest payments. And get this, they are not legally required to tell you they've done this. This has gotten them into hot water with regulators like the Consumer Financial Protection Bureau, who have pointed out that discretionary markup can lead to discrimination. The key takeaway to all of this, the interest rate they offer you is a negotiable starting point, not a final number. But we'll get how to fight back against this in a bit. First, the F&I manager has one more thing to sell you. This is the final stage of a hard sell. The F&I manager will now pivot to selling you a portfolio of optional add-on products. They're framed as an essential protection for your big investment. The sales pitch is often built on fear. They know RVs can have issues, and they use that to their advantage. First up is that extended service contract, which is basically an insurance policy for repairs after the manufacturer warranty ends, giving that some estimates say that 80% of RVs need major repairs by their 5th year. This can sound very appealing. Next is the GAP insurance, which stands for Guaranteed Asset Protection. Because RVs depreciate so fast that the loan terms are so long, you can easily end up upside down owing more on the RV than what it is worth. If it's totaled, your regular insurance company only pays what it's worth, and the GAP covers the difference. Then you have the tire and wheel protection, which covers damage from road hazards, something not covered by warranties or regular insurance. And finally, you'll see appearance protection, which is a Dealer applied paint and fabric coating with a warranty often sold for thousands of dollars. Problem is the price and the pressure. The cost of these products, which can be 5 to 10, even $15,000, is rolled into your 20-year loan. The F&I manager will say it only adds $40 to your monthly payment. They got you focused on that small monthly increase, not the massive total cost you're adding to the loan. Okay, so we've walked through all the stages of the shell game. Let's put it all together and let's see the real world impact. Let's say you see a travel trailer advertised for MSRP of 59.83. The sign says you get it for 408 a month. So that number on the sign is technically real, but it's based on a perfect world scenario. Maybe a perfect credit, no money down, very long-term loan that hides significant long-term risks. And most importantly, it completely ignores the thousands of dollars in freight, prep, and documentation fees that they add to the price only after you're already sitting at the negotiating table. The advertised scenario is based on that 59,083 price, a 20-year term, a low 8.99% APR, and zero down, a monthly payment of $40.80.20. But now, let's build the final contract. They add over $4,000 in freight, prep, and dock fees. Sales tax is calculated on that new higher price. The lender then requires a 10% down payment. Your credit score is good, but not perfect. And so your interest rate is marked up to 10.99%. And the term is more realistic at 15 years. Then you agree to a F&I products adding another $6,000 to the loan. That final payment is $706.29. That's a 73% increase from what was on the sign. The total cost of that RV was $63,175, which is now over $127,000. That is the shell game. They anchor you into a fantasy number, then slowly build a completely different reality, one fee and 1 percentage point at a time. But you don't have to play their game. Okay, so we've shown you the problem. Now, here is the solution. This is where your strategic checklist for taking back control of the deal. Number one, and I've said this in more than one video, secure a pre-approved financing first. This is the silver bullet. Walk into the dealership with a loan approved from your own bank or credit union. This completely neutralizes the F&I office ability to mark up your rate, and it changes the game. Number two, focus only on the out-the-door price. Refuse to discuss monthly payments and tell them I only want to talk about the final all-in price. And demand an itemized buyer's order that lists every single fee before you agree to anything. Number three, negotiate each part separately. First, agree on the out-the-door price of the new RV. Second, negotiate your trade-in value and only then, if you must, discuss financing. Don't let them bundle it all together. And number four, research the F&I products in advance. Decide beforehand if you want an extended service contract or tire protection. Get quotes from third-party companies online, which are often more cheaper. When they begin to pitch you these add-ons in the F&I office, you can confidently say, no, thank you, or negotiate from a position of strength. And number five, read everything. Don't be rushed. Take your time and read every single document before you sign. I've heard from so many people who were rushed and found surprises later. It's the numbers don't match what you agreed to. Stop the process. And that leads to the final, most important rule: be prepared to walk away. Your power comes from your feet. If you feel pressured or confused or the deal feels shady, just leave. There are other RVs and other dealers. Good ethical dealers will welcome your questions and transparency. This whole process can be incredibly frustrating, and I know so many of you have been through it. I want to build a community of empowered buyers right here. So my question for the day is, what is the most outrageous, unexpected fee you've ever seen a dealer try to add to your deal? Share your story in the comments below, and let's warn others and help the whole community get smarter together. Your experience could save someone else thousands of dollars. Adventure is calling, and I must go. If you found this helpful, please like this in the video so I know to make more just like it. And don't forget to subscribe. Next week, we're going to do a deep dive in those extended service contracts to see if they're even worth the money. You won't want to miss it. See you on the road.